Hi, in this video, we are going to learn about what is income tax, who needs to pay income tax, what are the five heads of income. Let's begin with what is income tax. Income tax is a direct tax that a government imposes on the annual income and profits earned by individuals and entities. It is calculated on the net taxable income of a person or entity for the applicable financial or fiscal year, which starts from 1st April of a year and ends on 31st March of the next calendar year. Here, there is a need for us to understand the difference between direct and indirect tax. While direct taxes are imposed on incomes and profits, indirect taxes are levied on goods and services. A major difference between direct and indirect tax is the fact that while direct tax is directly paid to the government, indirect taxes are those taxes that can be shifted from one individual to another. It is not levied directly on the income of the taxpayer. Income tax is progressive in nature. If your income is higher, the tax will be higher. If your income is lower, the tax will be lower. Who needs to pay income tax? Under existing rules of the Income Tax Act, any individual or business with income irrespective of the amount earned is liable to file income tax returns. But currently, tax on income is payable only if the net taxable income for a fiscal exceeds rupees 2.5 lakh. Here are the types of individuals and entities who are liable to pay tax. Individuals such as salaried individuals, self employed individuals, and self employed professionals whose income tax before deduction exceeds basic exemption level, that is 2.5 lakh. There are some cases, even though total income does not exceed basic exemption level, income tax returns should be filed. For instance, if an individual who have deposited more than 1 crore in bank accounts or have incurred 1 lakh or 2 lakh on electricity or foreign travel respectively. However, for companies and firms, it is mandatory to pay income tax irrespective of income or loss. Now, the question will arise, should we pay tax on our full income? The answer is no. Why? Because the tax relief has been extended by the government to the taxpayers in the form of tax deduction and tax exemption. Here it is very important to understand the difference between tax deduction and tax exemption. If an income is eligible for tax exemption, that particular income will not be liable for taxation. It means that the income is completely tax free and is not included when computing the total taxable income. For example, you may get a tax exemption for donating to charitable institutions and various relief funds. In case of deductions, initially the income is included when the total income is computed. If you qualify as per the guidelines provided for a deduction, the income tax deduction will be available to you. For example, you can get tax deduction by paying life insurance premiums and home loan EMI. In case of tax deduction, the income tax liability decreases by a specific amount for investing in a particular avenue. What are the five heads of income? As per the Income Tax Act 1961, one's income is divided into five categories: salaries, house properties, profit and gains of business or profession, capital gains, and other sources. Also, the purpose of classification into five heads of income is that there is a different computation mechanism for each head of income. Let's start with the first head of income, income from salary. If you are a salaried employee, your salary falls under this head. Your employer will deduct TDS as per your income tax slab and pay the same to the government. Once the total amount of income is calculated, the gross salary is taxed under this head. Apart from the basic salary, even the gratuity, pension, annuity, commission, fees, leave encashment, and profits that you receive from employer will go through TDS deduction. The next under 5 heads of income tax is the income from house property. Section 22 to Section 27 of the Income Tax Act specify the different provisions for computing income of someone owning property or land. It is essential to know that tax here is derived from the land or property and not from how much rent you earn from the same unless the property is let out to a business. Third is income from business or profession. Any kind of income that you obtain from trade, manufacture, commerce, or profession is chargeable under the business income head. Your expenses will be deducted from your revenue to calculate your profits, and the income tax will then be applicable under this head. Any kind of bonus, salary, or profit received from a partnership in a business organization will also be calculated as per the business income heads of income tax. Profession or business, then this tax will also be levied on them. Income from capital gains. Any gains or profits that you earn by transferring or selling capital assets which were held as investments are considered as capital gains. This includes investments in stocks, mutual funds, property, and many other types of investment. Capital gains are divided into two parts: long term capital gains and short term capital gains. For short term capital gains, if any capital holder sells his capital within a period of 36 months, the deduction of tax can be taken. The same can be said for securities sold within 12 months of its purchase. On the other hand, long term capital gains are those which are held up for more than a period of 36 months, and for the case of securities and shares, it is span of 12 months since the date of purchase. The last of the income tax 5 heads is income from other sources. Any kind of income which cannot be categorized under the first 4 heads will fall under this income head. For instance, winning from horse racing or lottery, gift received, dividend income, and interest from government bonds and securities fall under this head. These are the income tax 5 heads that every taxpayer should know about. Consult a tax professional to more about these heads and determine the correct head under which you should pay income tax. Thank you.